A lot of shares changing hands today, and that's all I can say. I want to stick with Amazon and bring in Melissa Burdick, co-founder and president at PacView and Amazon veteran. Melissa, what do you make of the Prime price hike and whether people are really going to pay more? Is this investor reaction? Does it make sense?
Yeah, I definitely think so. I mean, they've had a history of raising Prime prices every 4 years. We're at that 4-year mark. I've heard analysts say that an additional $20 price increase will add another $1.6 billion in revenue for Amazon. And they've had tons of, there's cost increases coming. So there's a lot coming their way. So, they've also added a lot of benefits to Prime. So yes, it makes total sense. It's at that 4-year mark. And the other thing is I think half the US population is a Prime member and their retention rates are super high. So I think it all makes sense.
So let's talk about then how they keep members coming back to Prime, right? They got to keep sweetening that deal. Does that mean, continuing to spend billions of dollars on Prime Video or something else?
Well, they continuously add more benefits. They have definitely added lots of new streaming capabilities, new shows, Jack Ryan. They will continue to do that. But I think at the end of the day, people love the Prime membership. They love the fast shipping. They like how easy it is. And so I think it's a no-brainer for a lot of people that are already in the business now.
Let's talk about what's next for Amazon. Obviously, we've had this big leadership transition under Andy Jassy. We're coming out of a pandemic where there's concern, how many people are going to keep buying things on Amazon. And you've got stiffer competition from Target and Walmart and others who've really shored up their e-commerce operations.
Yeah, I mean, I definitely think that there is competition coming, but one of the strengths of Amazon, and I think one of the reasons why we saw such great results in Q4 is the power of their third-party marketplace. So others like Target and Walmart, they also are looking at increasing their third-party marketplace as well. But Amazon has such a great lead ahead in that area. They fill in selection gaps. So there's this huge supply chain, shortage this year. And so it was the place where you could go to find anything that you wanted. So if your favorite brand was out of stock, a third-party merchant was able to fill in that selection gap. So I think that's one of their greatest strengths, and it will continue to do so.
Does a rise in the stock price this big, do you think it'll have a significant impact on retention and recruiting? I mean, there's been concern, obviously, about the stock languishing. That equity is a huge part of retaining employees at Amazon.
Absolutely. So that's interesting that you bring that up because there has been such a huge exodus this year at Amazon, especially within executives. A lot of people say it's because of the compensation. They place a lot of emphasis at Amazon over stock, and that takes up a lot of your compensation. So the fact that the stock has declined so much this year has resulted in people making less money, and so they're going other places. I think that's another reason why Amazon's probably going to have to look at better benefits, more pay for their people. So I think that might be coming too.
What about, when it comes to the fulfillment centers? I mean, clearly Amazon has been battling an image problem, a sort of likability problem, especially when it comes to, how the company treats warehouse employees. They've definitely raised the minimum wage there. But an equity jump doesn't necessarily have an impact on them.
Yeah, I mean, there has been a lot of press around that this year, but I also think that Amazon is committed to helping their people, and they've said that. So they definitely have some work to do in that area, and I believe that they will focus on doing that.
All right, Melissa Burdick, president of PacView, former longtime Amazon employee. Thanks so much for joining us.